Okay, hi. This is the team from Freshagenda here with a roundup of major issues we're seeing in the big picture around dairy. Firstly, go across the Dutch to New Zealand, where it's apparently raining right now. Weather maps show rainfall sweeping the country the next day or so. Started probably last night, and that's going to be interesting to see just what happens there, Joe.
Yeah, it's a couple of fronts moving across the country. The question will be, is it going to go somewhere useful, and is it going to have a big impact on milk production, and what will that do for market settings for next year? Yeah,
certainly it's dry enough. Some parts got a bit of rain last week. So we're watching our friends in New Zealand. We're feeling for them. We're watching with interest as to what comes of this, and does it start to turn things around for them.
It's a bit of a wild card, isn't it? And the other interesting story that's popped up this week is about lactalis and a salmonella contamination issue that's caused a fairly widespread recall.
Yeah, the amount of product involved, 7,000 tonnes out of the company itself, not big in the scheme of things, but it doesn't take much to represent a lot of value in infant formula. There's a number of countries affected. The interesting thing is just how significant France is in the picture. So France represents a bit over a third of EU exports of infant formula product. Into the key market that we're all watching is into China. France is only 14% of European exports into that country. So the big issue that I guess comes is, what's the reaction of Chinese regulators to a recall for salmonella in a country that's supplying? They haven't taken too kindly to this in the past.
They're highly sensitive, aren't they? And do they extend that sensitivity to the European Union?
So there's precedent for that. Sorry, I didn't mean to cut across you there. But there's precedent for that with soft cheeses, because we saw an EU-wide ban in place for a short period of time earlier this year. So that's one to watch as we close the year.
Yeah. The other, development, it's a bit of a slow burn, as these things are, but the EU and Japan have signed the dotted line on their trade deal.
It's been 4 years and 18 rounds in the process of negotiation, and we pretty much knew the detail of this agreement in July when they did their last round of negotiations. But they've signed the ink on a cars for cheese deal, apparently. So European importers will be able to have a better deal on motor vehicles from Japanese manufacturers, and there's a better gateway to the Japanese market for cheese. So
we've already seen Europe increase their share of the Japan market for cheese, even without this deal, Steve, haven't we? So this could really be significant.
Yeah, look, we're looking at a chart right now that shows quite a spurt of growth in European cheese going into Japan since the Russian embargo. I mean, since that door got shut to them, they've aggressively gone out and looked for other markets to use up the capacity, and it's a real success story for Europe. They've increased their share gradually over that period, at the expense of Australia in particular and others. So does this give them another spurt? I guess the good news is we've got a long time to adjust to this, because the 30% cheese tariff comes off over 15 years. We're waiting for the detail. I'm sure it's buried in various websites we will trawl through to find out, but just what pace of step down that occurs. Is there an introductory fall and then a slow reduction? I think that's some of the detail that will be interesting to see.
It comes into force in 2019, is that right?
March 2019 it starts to apply. So, add 15 years to that and we're in the mid-30s. It's a long way off, but it's going to start to change the settings even further.
That's right.
More pressure on cheese.
And particularly on Australia, as Japan's been a very important market for Australian cheese for a long time. And there's a bit of pressure building on cheese prices in the short term anyway, Steve, isn't there, with what's happening in Europe?
Naturally, the build-up of milk supply, which has been running, it's currently running 4 to 5% ahead of last year on pretty low comparatives. But it's what happens in the spring, and the expectation is it's another 3 to 4% growth year on year through spring. And with skim milk powder and butter being so unattractive as a combination, we'd expect to see a lot more milk move to cheese. So that puts the focus on Gouda is the main cheese commodity produced there. And if we think we're isolated from those influences out here, here's a nice little chart to remind us how closely tied the cheddar prices in Oceania are to the European Gouda price.
And there's the US sideshow, of course. Cheese prices are also, wholesale cheese prices in the US are also under pressure. We're still seeing supply running ahead of demand in that market. They've already been quite active exporting cheese this year, so that's unlikely to change in the next little while.
So speaking of prices and pressures on prices, the CMB's taking a beating, Joe.
Yeah, our commodity milk value, which we track, as you know, regular viewers, it's come down to just over $5. And the last time we were at this level, Steve, was in mid-April this year. And looking back over that period, commodity prices have fallen, all except cheddar. Cheddar is actually a little bit higher now than it was back in mid-April. The dollar hasn't changed. So given that there's ongoing pressure on cheese, we're a little bit worried about our poor old commodity milk value going into 2018, but obviously it's one that we'll watch.
So that's not ending the new on a cheery basis for 2017.
Not really.
As we welcome Christmas and a Happy New Year. So,
but we have got all these festive decorations for our very last Outlook blog for the year.
Just to be in the spirit. So we're wishing our viewers, all 30 or 40 of you, all the best for Christmas and New Year, and we'll see you again in the new year. Goodbye.